One of fintech's most anticipated IPOs, Klarna, valued at $45.6 billion US, is reportedly looking to raise further funds since its last $639 million US round back in June in anticipation of building towards public debuts. But they're raising concerns around the valuation of Klarna, the credit line of business that buy now pay later completely resolves around, and the shocking statistics of multiple overseas buy now pay later players that might shine some light on the future of it. Is Klarna on its path to break through the declining growth cycle of buy now pay later? Good morning everyone, this is Marek from Payment Genes, and today it's all about payments. The most telling statistic of all is often the most simple one, and it certainly holds true with buy now pay later, which has seen its user base grow with an impressive 85% in the last 15 months. Consumers' use of buy now pay later for retail purchases of Nike shoes or the latest TV or even plane tickets grew from 20 billion in 2019 to 24 billion in 2020 to over 100 billion US dollars in 2021. Klarna is also not sitting still, continuously expanding their product offerings, transforming their approach, revenue model, and regulatory efforts. Just recently bringing gambling blocks to open banking payments, as well as beginning to report consumer use of its buy now pay later products to credit reference agencies. And props to the way they leverage the consumer relationships they have built, which is reflected in its net revenue growth and Klarna's explosive growth evaluation. And with these stats, there's not a thing to worry about, right? Well, in reality, there is. In one of our previous videos on buy now pay later, we covered the 3 industry challenges in depth. But in short, there's 3 fronts and they're all equally important: consumers, merchants, and regulators. Now, moving on to the industry red flags as we see them develop, the Australian buy now pay later sector was once considered as the global leader, with a market cap of about 46.4 billion Australian dollars in March 2021. Since that moment, it's been going downhill, with 40.23 billion Australian dollars just vanishing. Zip, now the Australian buy now pay later player, has its market cap at 777 million versus its peak at 7.7 billion. That's a rough 7 billion Zip shareholders have lost in 12 months. Zip shares peaked in March 2021 at $14.53. Today, they're worth about $1.14, which is down 92% respectively. On May 3rd, shares of PayRight, Splitit, Dough, Zip, Fatfish, OpenPay, Laybuy, IOUPay have had an explosive decline since their peak. Also, Australia had 12 different buy now pay later stocks. The rest of the world has 4. But things are not looking too great if Down Under were to represent the future of European and US buy now pay later companies. Several of those buy now pay later stocks have been disappearing at an alarming rate. 33% have disappeared in a matter of months, bringing them down from 12 to 8. Afterpay sold to Block. Hum sold to Latitude. Sezzle sold to Zip, Zebit, delists shares and returns to the United States of America. Back to Klarna's beyond explosive growth in terms of valuation. It processes roughly 80 billion US dollars of payments and has a market value of about 45.6 billion. What raises the question is what the rationale is behind such a valuation. What's the amount of free cash flow investors expect Klarna to generate in 5 to 10 years? What margins and profits underlie such cash flow hypothesis? With incumbent and startup buy now pay later providers suffering from unsustainable losses with no clear end in sight based on current trajectories, as well as the tanking share prices, we believe it is critical for buy now pay later providers to fundamentally rethink their business models. We see 3 key pathways that buy now pay later solution providers can explore, including optimization, integration, and expansion. Again, using insights from Klarna, it is a critical aspect in the development phases of the famous alternative payment method. Whilst Klarna's revenue grew 44%, its losses also quadrupled as geo expansion continues. In all honesty, we love payments and we love seeing honorable entrepreneurial journeys like Klarna has. But the question remains, will Klarna be able to sustain their valuation, ensuring they will have a bright future ahead? We believe it's very possible. We'd love to see it happen, but it's going to be an interesting forthcoming 12 months. We like to say, you're just one hire away from overcoming all of these challenges and realizing all the growth you ever aspired to achieve. Because in reality, by now it's pretty clear, consumers and merchants love buy now, pay later. Let us know your thoughts on the matter down in the comments below. For now, I'd like to thank you all again for watching. I'm looking forward to see you all again next week. Cheers, bye-bye!